Hi everyone, Angie with Angie Home Loans and Nexa Lending. Welcome back to the Home Loan Roadblock series where I cover some of the more common reasons that people get denied for a home loan and then give you some practical tips and strategies to work through those issues. Today we're going to go over if your credit score is too low and how to possibly maneuver that issue. So one of the biggest reasons people get denied for a home loan isn't their income, it's their credit score. But here's the good news, your score isn't permanent, it's something that you can improve over time. So what is a credit score? Think of it as a report card that tells lenders how you've handled borrowed money in the past. The higher your score, the less risk you typically represent to a lender, which can mean more loan options and sometimes better interest rates. So now here's something a lot of people don't realize. Your score isn't based on just one thing. It's made up of several factors working together. The biggest factors are, number one, payment history. Have you paid your bills on time? This is one of the biggest pieces of your credit score. Number two would be credit utilization. How much of your available credit or your credit line are you using? And we've talked about this in previous episodes. You want to try to keep that under 30% if possible. Lower than that is even better. Number three would be the length of credit history. Older accounts can help establish a longer credit history. So if you aren't using one of those older accounts anymore, don't close it out. Let it sit there because it gives you a longer credit history. Maybe even throw like a utility bill on it once in a while that you're going to pay off before any interest accrues. Number four would be credit inquiries. And a lot of people seem to know about these, but they don't know exactly what and how they work. Opening several new accounts in a short period of time can temporarily affect your score by showing too many credit inquiries. So then some people worry about shopping for a home loan that, those credit inquiries are going to hurt their score. Where, in fact, if you shop for a home loan, usually within about a 30-day period, they're going to look at any of those inquiries as just one inquiry because they know you're shopping. So it's not going to hurt your score as long as you keep that shopping window within 30 days to be safe, but I think some of them go to 60 days. The number five thing that affects your credit score is credit mix. Having different types of credit like installment loans, which would be like vehicle loans, and revolving credit, which would be like credit cards, can also play a role. So to wrap everything up, the important thing to remember is this. A low credit score today doesn't mean you can't become a homeowner tomorrow. And a lot of these loan programs, believe it or not, have lower minimum credit score requirements than those rental properties. So it's always good to check with a lender and see what you might be able to do today. And if you can't get there today, what are some, roads you can take to get into a home down the road a little ways? In my next video, I'll share some practical ways you may be able to improve your credit score before applying for a mortgage. So thank you guys for watching. Follow along so that you don't miss anything, and I'll catch you guys in the next episode. Bye.